I think the volume recovery from COVID is critically important. We have seen significant impacts on our volumes. So our Australian volumes were down around 17% in 2020 on 19 levels. Obviously, aviation, as you say, is a significant part of that. Over 75% of our volumes related to international travel. So we're certainly keen to see, as the vaccines roll out, international borders start to reopen and that recovery profile start to play out. We also are very keen to see domestic borders in Australia and the snap lockdowns that we've seen start to move away, so that we can start to see that recovery in our domestic fuel volumes as well.
Now, recently, you guys have been very big when it does come to the transformation, even your predecessor as well, the $100 million in cost out. I saw today that there was a further $40 million that you're looking at for 2022, getting leaner and meaner, I suppose. But does this, in that aspect, even with the REIT spin-off at the same time, does this basically put any prospect of a deal with Couche-Tard to bed?
Look, what we're focused on is driving significant development and growth in the business from the platform we have in place. You touched earlier on the strong growth that we've seen in convenience retail as our customer offer continues to be developed. We've seen a trend to smaller format convenience shopping only strengthen through COVID. We saw our international earnings grow by 18% during COVID. So despite the impacts of COVID, those two growth engines, if you like, for our business, we continue to focus on. We've got a rebrand to the Ampol brand that's well underway in our network. So we see a lot of opportunities ahead for our business. We're continued on delivering against those opportunities, and what Couche-Tard chooses to do is really up to them. We can see a lot of potential that we're executing against.
Now, there's been obviously a raft of attention when it does come to fuel security here in Australia. Lytton's obviously been a sour note when it does come to your financial performance. It's unavoidable in that respect. Can you commit to keeping the Lytton refinery open, considering that the drain that it is on your bottom line?
Yeah, so the Lytton loss in our result was $145 million for 2020. Clearly, that's not sustainable, and we announced our strategic review in the second half last year, and that'll complete in the second quarter this year. So we're working through that review process, and clearly that's important for the future of our company. But conditions are challenging. You know, if you look at COVID and the significant impact on our business, refining is connected to international markets, and we've seen the oversupply of fuel products in the international market significantly impact Lytton's viability. The other area of our business that's connected to international markets is aviation, as I mentioned earlier. So, look, we're working through all of that as we complete our review, and we're on track to do that in the second quarter.